G'day, Ziggy here, CEO of 3P. It's tax time, and I have with us this evening the Director of 3P Accounting and Tax, Chris Borg. Chris, how are you?
Yeah, very well.
That's good. Chris, it's tax time again, and it just seems to be coming around too often these days. But I was just interested, one of the things that as we talk about tax time, and we'll do two parts to this because there's a fair bit to talk about. But the Assistant Commissioner, the Tax Office Assistant Commissioner, Karen Fote, came out this week and basically said that to taxpayers, don't assume that all the work-related expenses that you've been claiming in the past will automatically apply for this financial year as well. Because she also mentioned that what will obviously be a higher claim will be home office expenses, because most people have spent their time in home office. So I just thought we'd have a chat just around that. I guess things just to be wary of when it comes to work-related deductions, just the few areas that the tax office is sort of targeting and how we can protect ourselves.
Yeah, sure. I mean, I suppose the warnings come about from the government or the ATO expecting a quicker and more higher volume of lodgements early in July. Obviously, there's been a lot of people either laid off or made redundant or stood down during the period. So obviously, lodgement of the tax return this year and getting that refund in is going to be in focus. And I suppose they're warning the risk of the temptation to overclaim, to try and get a bigger refund, to try and obviously get over any financial hardship. So I suppose they're getting on the front foot to make sure this happens. To put it in context, in the last few years, the tax office have been red hot on work-related expenses as they've beefed up their technology. Certainly as a newer business, we've been privy to a lot of the ATO's compliance actions in terms of them giving an insight as to what they do, what they see, how they see it with their technology. And it's not the case in the past where they only had the ability to say maybe targeted occupation, target teachers, target doctors, target real estate agents, because that's the technology they had. So when I get asked the question, who they're targeting this year, well, it's everybody. They've got the ability to do so. So whilst COVID is a trigger for the ATO really getting on the front foot and, checking compliance, it's really been a build-up over the last 2 years. So we're in a fortunate position, as we said, as a new practice, getting on the front foot with the ATO and engaging with them. We've been able to see a lot of the compliance activities have been able to do. And because of that, we have the information and knowledge. And also we've structured our compliance and beefed up our own compliance to make sure we can meet their standards. So, as you said, the couple of things that you mentioned is number one. Yes, you have there's this new 80 cents per hour rule for working from home as a simplified deduction. So there's that, and then also again, just making sure that just because you've passed or you've claimed something in the past, or there may not have been a focus on something in the past, and I'll go through those couple in a minute, doesn't mean you can claim them this year. So breaking it up into a couple of pieces. The first one's the home office deduction. So in the past, a lot of people went to work, didn't necessarily do a lot of work from home. But obviously since the COVID shutdown and the states enforcing the lockdowns, a lot of us, if we were lucky enough to be able to do our job, could work from home, obviously with technology allowing that and Zoom and whatever have you. So to simplify things, the ATO said that if you work from home, providing you've kept a diary or a logbook of the amount of hours you've worked per week and the weeks you've worked from home, you're able to claim a flat 80 cents per hour deduction for the amount of hours you work from home. And that's meant to cover your home gas, electricity, telephone and internet. In contrast, there's always been the ability to claim home office expense, providing you've been able to keep your records. So, for example, in the 2019 financial year, you were able to claim your gas and electricity based on two parts. Either you kept a format of your home, and you're able to identify your dedicated home office. And when we say by dedicated, actually have to have a room that's closed off like a study or a bedroom that's got not used for anything else, you can then get that percentage of floor space, 10, 15, 20% compared to the rest of your house, providing you could substantiate that. And then from there, able to, I suppose, take your total gas and electricity cost, claim that at that percentage, you're able to claim your gas and electricity. At the same time, then you have to keep a separate record for your home internet usage, your mobile phone usage. You have to keep logbooks of your home internet usage, for instance, the amount of hours or the amount of data, which can be quite difficult with multiple devices. At the same time, with your mobile phone, you keep a log of your phone use for a 4-week period, and then you're able to claim a percentage, and of course, claim your keep your bills. This 80 cents per hour, which commences from 1 March 2020 to 30 June 2020, eliminates the need to keep all of those records, and all you need to do is just keep your hours. Also, that second test, or that second alternative, which I've talked about, you also had to get a letter from your employer, which essentially stated that you had to work from home, or it had to be in your contract of employment to state you have to work from home. A third alternative to your home office expenses was to claim a cents per hour, again, based on log usage. That required you, again, to be able to claim at 52 cents per hour on top of your home internet and your mobile phone. But again, that required you to have a dedicated space for work, like I said, a bedroom or a closed off study. With the 80 cents per hour, again, it doesn't actually require you to have it. You could have a dedicated workspace. As long as you could be working on your couch, you could be working on your kitchen table.
And I dare say most people have.
May not comply with a lot of HR laws, but I suppose it recognised the fact that, working from home was rushed upon, had to be, and it was a last minute thought. So they're not going to obviously penalise taxpayers because they haven't had the time or the ability to get a dedicated home office. So that's good news and makes it a lot easier. So that is one tip, I suppose. If you have been working from home, you do have obviously the ability then to claim on that 80 cents per hour, or again on that alternative 52 cents per hour, providing you keep all of those and your home telephone and internet and mobile phone, providing you keep those records, you have that dedicated home office. Again, you can verify with employer by way of employment contract or letter. Providing you've got all those things, nothing again is stopping you from doing that. And indeed, it may be a better dollar claim for you if you've kept those records. But failing that, you just got the straight 80 cents per hour. So again, the ATO is giving you an alternative to be able to claim those deductions. They're doing that for two reasons, or three reasons I see. One, to make sure you don't miss out. I think second of all, they know they're going to get a lot more people claiming home office. So this is an easier compliance check for them, because all they've got to do is give us a log of your hours. And I think number three, they're probably hoping a lot of taxpayers will just go to this default 80 cents an hour rather than claiming 52 cents, then rather than claiming mobile phone on top of that, and then home telephone and internet. That way then, again, they save some revenue in terms of deductions. But again, providing you do all this work, and this is things we always tell our clients when we're at an appointment, preparing for an appointment or signing off a return, make sure you're getting these records together for tax time prior or ready for the next year so you don't miss out again.
Yeah, that's I think I just wanted to add in there. I mean, you and I have been accountant for many years, and I've been a bit more than you, but the tax office, whilst at times they have been unreasonable in some situations, in the main, they are pretty reasonable. I mean, they show that you're entitled to a certain amount of deductions, and as long as you've got good record keeping procedures and measures, and you're reasonable in the amount that you can claim, really, you shouldn't fall into any problems. I mean, the acting commissioner, what she's saying here is that given that most people have been working from home for this year so far, which falls into the second half of this financial year, they don't expect to see the same amount of travel expenses that there was the previous year, because everyone's been working from home. and what they expect to see more are home office expenses as opposed to travel. So there's some logical stuff in there that I guess they're saying, but the key is that they do have the ability to flag a lot of these things, don't they, with the technology that they have?
Absolutely, and that's the thing now. It's not about honing in on a particular occupation and spending their resources and very, very, I suppose, very cumbersome on them in the past to be able to check that their systems are, their analytics and the formulas they've got is very mathematically minded, so they can pretty much pick up anybody now. So as we'll talk about in the tips video we'll do next in terms of preparation, record keeping is always the key. And I suppose keeping contemporaneous records, we've said that in relation to the job keeper and the cash flow boost, having contemporaneous records, and we've said that in the past, and that will come up in upcoming videos as well. You need to keep your records as you go. You shouldn't come to do your tax return, turn up to the appointment, or whatever have you, send information or send statements that you've claimed these records or you've claimed these expenses, or say just claim the same as last year. That isn't what you should be doing. And certainly for our clients saying claim the same as last year, we'll always be asking those questions. Okay, let's test that. And we have certain questions and statements that we've put together based on industry bodies that have provided that. And also in our proactive meetings with the tax office, we've actually ran by our questions and our questionnaires and our checklists. So we always check those checklists with the tax office to make sure that in an audit, which we hope nobody ever goes through, but inevitably some will, are these the types of questions that you would like us to ask? And either they'll say, no, we don't necessarily need to see that, or that's too much detail, add a little bit more. Because ultimately we ask those questions because we need the responses that we're going to get out of that are the responses that the ATO will need to see to determine, is that an allowable deductible or is it not? And it's the job as a taxpayer, and certainly if you see an accountant or tax agent to do, is to only put through the expenses that you do have, and also at the same time remove the ones that you shouldn't. So you start off with a scenario where you believe you can claim a certain amount. Make sure you test those theories. You have the three things. There's always, have you got the records? Have you got the receipts? Have you got the invoices? Whatever have you. Second of all, how does that connect to your current employment? Okay, so you're saying I use my car, I travel my car. Well, how does it connect? Just because you've had motor vehicle expenses, how does it connect to your current employment? Have you used it? And I think the other thing is, have you actually spent the money? Have you actually incurred, or did you just find that receipt from somebody? So all of these things. And, the accountant's job is, whilst it's, the tax aid job is, whilst it's great to, see an accountant that can give you the best refund, the best accountants are making sure you're getting the maximum refund you're entitled to, not necessarily the highest, because it's their job to also make sure that your risk is mitigated. So if you had somebody who has seen an accountant, or you've heard somebody who says, oh, this person's claiming the highest refund that's 50% up on last year, you've got to question, why is it because previously you haven't done it correctly? And that is accountant job too, by the way, is identifying expenses you may not be entitled to, such as this 80 cents per hour. At the same time, are they claiming things that could get you into trouble later? So certainly we'll talk about that tips for tax time. And one of those things that you should be claiming, as you just said, is and identified by the Assistant Tax Commissioner last week. One of them is the travel expenses, and another one is uniform. So they're two they've identified, because what they're saying is if you are working from home or you have been stood down, then you are likely to have travelled less, particularly during COVID, right? And also laundry. So if you're claiming laundry, which is generally $1 per wash, what they're saying is, well, during COVID, you haven't had a uniform to wash. You've either haven't been working, so you've been stood down, or you have been working from home, so you haven't had to wear a uniform. So again, they're looking out for those. If they see that the expenses have gone up or remain the same during COVID, they're certainly going to ask the question. They're going to check your occupation. Okay, your occupation was continually working during COVID. That's fine. Okay, or has it stopped? Have you been working from home? Again, they're going to look at those types of things. So if you're going to claim that, you've got to and we'll be doing this with our clients, and certainly accountants should be asking the question, or yourself, okay, am I going to claim expenses? Was I actually incurring those expenses during that time? Was it connected to my employment? So again, that's the things that the warnings so far. There'll be more that will come out, and we'll communicate those as they come. But they will certainly be the warnings. That,
I think there's two. You're right. I think there's two messages as well in there. I mean, one that I've found over the years as an advisor has still come across clients who have been doing their tax returns themselves, and there's no issue with that. And e-tax is a very good system, but for some reason they're still not claiming the deductions that they've been entitled to.
Absolutely, yeah.
And so, look, in many instances, not all instances, but in many instances, it's always worth, getting your tax returns done through a tax agent who does have the knowledge and the expertise and all the things that we're talking about tonight, right? Because it's, it's a whole, it's a big ball game. It's not something that's as easy as what we'd like it to be.
Exactly right. And I think, there was a few years ago where they thought that, Australian getting to this one-touch system where you can get your tax return done, click a button, and it's done. It's very similar to what New Zealand have, but the Australian taxation system, doesn't matter how we reform it, is never going to be as simple as New Zealand. In fact, it's getting more complicated. COVID has made it more complicated again. So we'll just never get to it with so many different things, investments that go through negative gearing, etc. But I suppose as a tax agent, it's more, yes, the right one is making sure you're claiming things that you may not have been entitled to in the past. But as I mentioned, making sure you're not claiming things that'll get you into trouble. But also, tax agents are generally accountants like we are. We're a group. We've got financial planning, property, finance, legal, etc. There could be an opportunity from a wealth perspective where you could save tax with the right strategies. And the right strategy isn't just going out and buying a car, or just going out and paying for a few more pencils or pens or stationery or whatever. It's actually maybe, depending on your, where you sit as an age bracket of your wealth, there could be things to proactively plan for in the future. So a good advisor, a good tax agent, not only be able to process the tax return for you and tell you what you can and can't claim based on your current situation, but they will also help you plan for the future. So it may not give you an immediate benefit, but the following year with advice, and being able to put you within other advisors within a group like ours, so you come to your tax time next year, you're able to reduce your tax further. So again, it's those things that are probably just as important.
And the key is, we're still in June, so there's still an opportunity to ask the questions now, to make whatever changes are needed, record keeping, the whole lot, because once 1st of July comes, you're limited.
Either that, or you listen to Officeworks or Harvey Norman will tell you what you can claim. So they're giving us some good tax advice at the moment as well. So
all right, so we're going to cover some tax tips. That's going to be in part 2. So you're going to hang around, Chris?
Oh yeah, maybe. Yeah. Just for you, I might.
All right, we'll see you in the next segment in part 2, where we cover 5 tax tips to you. We'll see you soon.